Today, we're diving into the fascinating world of cryptocurrency. You've probably heard the term tossed around in the news or online, but what does it really mean? In this video, we'll break down the basics, explore how cryptocurrencies work, and discuss why they've become such a hot topic. Whether you're completely new or just looking to brush up on your knowledge, you're in the right place. Let's start by understanding what cryptocurrency actually is and why it's capturing so much attention worldwide. At its core, cryptocurrency is a type of digital or virtual currency. Unlike traditional money, which you can hold in your hand, cryptocurrencies exist only in digital form. They use cryptography for security, making them difficult to counterfeit or double spend. The most well-known example is Bitcoin, but there are thousands of others, each with unique features and purposes. Cryptocurrencies are not issued by any central authority, which means they operate independently of governments or banks. Cryptography is the backbone of cryptocurrency. It's a method of protecting information through complex codes, ensuring that transactions are secure and private. When you send or receive cryptocurrency, cryptographic algorithms verify and record each transaction. This process helps prevent fraud and keeps your digital assets safe. The use of cryptography is what sets cryptocurrencies apart from other forms of digital money and makes them trustworthy for users around the globe. One of the most important features of cryptocurrency is decentralization. Unlike traditional currencies managed by central banks, cryptocurrencies operate on decentralized networks. This means no single entity controls the currency. Instead, transactions are verified by a distributed network of computers, often called nodes. This structure increases transparency and reduces the risk of manipulation or corruption, making cryptocurrencies appealing to many users. Cryptocurrencies rely on a technology called blockchain. A blockchain is a digital ledger that records every transaction made with a particular cryptocurrency. Each block contains a list of transactions, and once a block is full, it's linked to the previous one, forming a chain. This system is transparent and nearly impossible to alter, ensuring the integrity of the entire network. Blockchain technology is what makes cryptocurrencies secure and trustworthy. When you send cryptocurrency to someone, the transaction is broadcast to the network. Nodes verify the transaction using cryptographic algorithms, ensuring that the sender has enough funds and that the transaction is legitimate. Once verified, the transaction is added to the blockchain, making it permanent and visible to everyone on the network. This process is fast, secure, and doesn't require a middleman like a bank. To use cryptocurrency, you need a pair of keys, a public key, and a private key. The public key is like your email address, it's what you share with others to receive funds. The private key is like your password, it must be kept secret because it allows you to access and spend your cryptocurrency. Together, these keys ensure that only you can control your digital assets, adding another layer of security. Many cryptocurrencies use a process called mining to add new transactions to the blockchain. Mining involves solving complex mathematical problems, and the first computer to solve the problem gets to add the next block. This process is called proof of work. It ensures that all transactions are legitimate and prevents double spending. Other cryptocurrencies use different consensus mechanisms, but the goal is always to keep the network secure and trustworthy. Bitcoin was the first cryptocurrency created in 2009 by an unknown person or group using the name Satoshi Nakamoto. It was designed as a peer-to-peer electronic cash system, allowing people to send money directly to each other without a bank. Bitcoin's success inspired the creation of thousands of other cryptocurrencies, each with its own unique features and uses. While Bitcoin is the most famous cryptocurrency, there are thousands of alternatives known as altcoins. Some popular examples include Ethereum, Litecoin, and Ripple. Each altcoin offers different features, such as faster transactions, smart contracts, or unique consensus mechanisms. The diversity of altcoins allows users to choose the cryptocurrency that best fits their needs. Some cryptocurrencies, like Ethereum, support smart contracts. These are self-executing contracts with the terms directly written into code. Smart contracts automatically carry out actions when certain conditions are met, without the need for a third party. This technology opens up new possibilities for automation and trustless transactions in various industries. To store and manage your cryptocurrency, you need a digital wallet. Wallets can be software-based, like apps on your phone or computer, or hardware devices that store your keys offline. Each type of wallet offers different levels of security and convenience. Choosing the right wallet is an important step in safely managing your digital assets. Cryptocurrency exchanges are platforms where you can buy, sell, or trade cryptocurrencies. Some exchanges deal only with cryptocurrencies, while others allow you to use traditional money to make purchases. Security, fees, and available coins vary between exchanges, so it's important to research before choosing one. Exchanges play a crucial role in the cryptocurrency ecosystem. One thing that sets cryptocurrencies apart from traditional currencies is their volatility. Prices can rise or fall dramatically in a short period of time. This volatility can create opportunities for profit, but also comes with significant risks. Understanding the factors that influence cryptocurrency prices is essential for anyone looking to invest or trade. While cryptocurrencies offer strong security features, they're not immune to risks. Hacks, scams, and phishing attacks can lead to the loss of funds. It's important to use secure wallets, enable two-factor authentication, and be cautious with your private keys. Staying informed about security best practices can help protect your digital assets. Cryptocurrencies are often praised for their privacy features. While transactions are recorded on a public blockchain, the identities of the parties involved are usually hidden behind cryptographic addresses. However, this doesn't mean transactions are completely anonymous. Some cryptocurrencies offer enhanced privacy features, while others are more transparent. The legal status of cryptocurrency varies from country to country. Some governments embrace it, while others restrict or ban its use. Regulations can affect how cryptocurrencies are bought, sold, and taxed. Staying up to date with local laws is important for anyone involved in cryptocurrency, whether as an investor, trader, or user. More businesses and individuals are starting to accept cryptocurrency as a form of payment. From online retailers to coffee shops, the list of places where you can spend digital currency is growing. This increased adoption is helping to legitimize cryptocurrencies and drive their value. Cryptocurrencies make it easier and cheaper to send money across borders. Traditional remittance services can be slow and expensive, but cryptocurrencies allow for fast, low-cost transfers. This is especially valuable for people in countries with limited access to banking services. Decentralized finance, or DeFi, is a movement that uses blockchain technology to recreate traditional financial services without banks or intermediaries. DeFi platforms offer lending, borrowing, trading, and more, all powered by smart contracts. This innovation is opening up new opportunities for financial inclusion and innovation. Non-fungible tokens, or NFTs, are a new type of digital asset built on blockchain technology. Unlike cryptocurrencies, each NFT is unique and can represent digital art, music, or even virtual real estate. NFTs are changing the way we think about ownership and value in the digital world. Some cryptocurrencies, especially those that use proof-of-work mining, have been criticized for their environmental impact. Mining can consume large amounts of electricity, leading to concerns about carbon emissions. However, new technologies and consensus mechanisms are being developed to make cryptocurrencies more eco-friendly. As more people use cryptocurrencies, networks can become congested, leading to slower transactions and higher fees. Scalability is a major challenge for many cryptocurrencies. Developers are working on solutions like Layer 2 protocols and sharding to help networks handle more transactions efficiently. Cryptocurrency networks sometimes undergo forks, which are changes to the underlying code. Forks can create new versions of a cryptocurrency, such as Bitcoin Cash from Bitcoin. Upgrades are also common, as developers improve security, scalability, or add new features. These changes help cryptocurrencies evolve over time. Unlike banks, there's no customer service to help you recover lost cryptocurrency. If you lose your private key or forget your password, your funds could be gone forever. This makes it crucial to back up your wallet and keep your private keys safe and secure. Initial coin offerings, or ICOs, are a way for new cryptocurrency projects to raise funds. Investors buy tokens in exchange for established cryptocurrencies like Bitcoin or Ethereum. While ICOs can offer exciting opportunities, they also carry risks, including scams and regulatory uncertainty. Stablecoins are cryptocurrencies designed to maintain a stable value, usually by being pegged to a traditional currency like the US dollar. They offer the benefits of cryptocurrency, such as fast transactions, without the extreme volatility. Stablecoins are increasingly used for payments and as a safe haven during market turbulence. Tokenization is the process of turning real-world assets, like real estate or art, into digital tokens on a blockchain. This makes it easier to buy, sell, and trade assets, and can open up investment opportunities to a wider audience. Tokenization is one of the most promising applications of blockchain technology. One of the main advantages of cryptocurrency is the ability to send money directly from one person to another anywhere in the world. Peer-to-peer transactions are fast, secure, and don't require a bank or payment processor. This makes cryptocurrencies especially useful in areas with limited access to traditional financial services. All cryptocurrency transactions are recorded on a public blockchain, which anyone can view. This transparency helps build trust in the system, as users can verify transactions for themselves. It also makes it harder for bad actors to manipulate the network or hide fraudulent activity. Many cryptocurrencies are open source, meaning their code is publicly available for anyone to inspect or contribute to. This encourages innovation and allows developers from around the world to collaborate on improving the technology. Open source development is a key reason why cryptocurrencies continue to evolve rapidly. Cryptocurrency communities play a big role in shaping the direction of projects. Many cryptocurrencies use decentralized governance models, where users can vote on proposals or changes. This gives the community a voice and helps ensure that the network serves its users' interests. Unfortunately, the popularity of cryptocurrency has attracted scammers and fraudsters. Common scams include fake investment schemes, phishing attacks, and fraudulent exchanges. It's important to do your research, use reputable platforms, and never share your private keys with anyone. In many countries, cryptocurrency transactions are subject to taxes. This can include capital gains tax on profits from trading or income tax on mining rewards. Keeping accurate records of your transactions is essential for staying compliant with tax laws. The future of cryptocurrency is full of possibilities. As technology advances and adoption grows, we may see cryptocurrencies become a regular part of everyday life. New applications, improved security, and greater scalability could help cryptocurrencies reach their full potential. There are many myths about cryptocurrency, such as the idea that it's only used for illegal activities or that it's completely anonymous. In reality, most cryptocurrencies are used for legitimate purposes, and transactions are traceable on the blockchain. Understanding the facts can help you make informed decisions. If you're interested in using or investing in cryptocurrency, start by doing your research. Choose reputable wallets and exchanges, and learn about security best practices. Start with small amounts, and never invest more than you can afford to lose. Education is the key to navigating the world of cryptocurrency safely. There are many resources available for learning about cryptocurrency, from online courses and tutorials to books and community forums. Staying informed will help you make better decisions and avoid common pitfalls. The cryptocurrency space is always evolving, so continuous learning is essential. Cryptocurrency is having a global impact, especially in countries with unstable currencies or limited banking access. It offers new ways for people to save, invest, and transfer money. As adoption grows, cryptocurrencies could play a major role in shaping the future of global finance. Like any investment, cryptocurrency comes with both risks and rewards. Prices can be volatile, and the technology is still evolving. However, the potential for innovation and financial inclusion is significant. Weighing the risks and rewards is essential before getting involved. Cryptocurrencies are driving innovation in the world of payments. With features like instant transfers, low fees, and global reach, they're changing how we think about sending and receiving money. Businesses and consumers alike are exploring new ways to leverage these benefits. Developers are at the heart of the cryptocurrency ecosystem. They create new coins, improve existing networks, and build applications that expand what's possible with blockchain technology. Their work is essential for driving innovation and ensuring the security and reliability of cryptocurrencies. The cryptocurrency industry is becoming more diverse, with more women taking on roles as developers, investors, and leaders. Diversity brings new perspectives and helps drive innovation. Encouraging more women to participate can strengthen the entire ecosystem. The world of cryptocurrency changes quickly. New coins, technologies, and regulations are introduced all the time. Staying informed through reliable news sources, community forums, and official project updates is crucial for anyone involved in cryptocurrency. In summary, cryptocurrency is a revolutionary technology that's changing the way we think about money, payments, and finance. While there are risks and challenges, the potential for innovation and financial inclusion is enormous. As the technology matures, cryptocurrencies could become an integral part of our daily lives. Thanks for joining us on this journey into the world of cryptocurrency.